Whenever things got rough, I always remember what my father used to say.
Running a business does test a man, my son. There are ups and downs, glorious highs, and sometimes a low that leaves you feeling defeated.
The character of a man and the character of a business are not very different, are they?
Yes, but when the chips are down, we must stand up, dust ourselves off, and motor on.
Volatility. It's a funny thing. It makes you question yourself and wonder if you've made all the right decisions.
Sure, you can question some of your decisions, but stay steadfast on your goals.
Dad always said, there are no shortcuts and no quick profits.
There are no free lunches, are there? There is only one
Right way.
At PPFAS, we think like Rahul and his father. That volatility is a fact of running a business. And buying equity shares is like owning a part of that business. We use value investing principles to manage your money. This means we invest in the right businesses at reasonable prices and for a longer term.
PPFAS Mutual Fund. There's only one right way. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Okay, good evening everyone. Today we are trying a new thing. So we have Delhi and Bangalore over a Skype call. So they will be back at the time of the Q&A and you will be able to see them asking questions. Any guesses for the topic of the presentation? So yeah, we'll be looking at the building material sector, mainly tiles and to some extent sanitary ware and faucets. So coming to the size of the industry is about 95,000 to 1 lakh crore industry. Again, these figures might not be accurate to the T because a lot of the industry is unorganized. Out of that, sanitary ware is about 4,000 crores and faucets is about 7,000 crores. The biggest one here is tiles, which is about 27,000 crores, which we'll be covering in detail today. And if you see the organized versus unorganized, plywood is a segment where you have the maximum unorganized segment, and there you see the maximum competition. MDF is still a new segment. It's a very small segment right now. It's about 1600 crores, and 100% of it is organized. Laminates is about 4000 crores, and 65% is organized. Pipes is again big. It's at par with tiles. So pipes is about 25,000 crores and 70% of it is organized. If you look at the players in each of the segments, so in sanitary ware, it's basically three players, three organized players having an equal market share. So you have Hindustan Sanitary Ware, Hindware, you have Sera, and you have Perriware. So all three of them almost have similar market share in the organized part of the segment. In faucets, Jaguar is by far a very large player, followed by Grow and then HSIL. In tiles, again, there are a lot of unorganized players based in Morbi. But in the organized segment, you have Kajaria, Somani, HR Johnson, Nitco, and others. In plywood, again, as I said, only 30% of the is organized segment, and out of that, Greenply and Century Ply are the larger players, followed by Uniply being a small player. MDF as a segment started just 2 years back, and the big players here are Greenply, Action, and Rushel Industries. In the laminate segment, you have Greenland Laminates, Merino, and Century Ply as a small player. In pipes, again, you have Supreme, Phenolics, and Astral Poly. So we'll look at tiles in detail, but just to have a background of all the segments that most of the companies are present in, In plywood, the largest brand has about 22% market share. MDF Greenply has about 30% market share. Laminates Greenlam again has a 18% market share. Kajaria in the tile segment has about 22% market share. In paints, Asian Paints with a 54% market share. And again, this is the market share in the organized segment. So it's not a overall market share; it's market share in the organized segment. In sanitary ware, Cera, HSIL, and Parrywear, as I said, they have almost equal market share, about 33 to 39% each. In plastic pipes, Supreme is the largest player with 11% market share. In adhesives, Pidilite is by far the largest player with 70% market share and very low competition over there. Jaguar has about a 60% market share in the organized segment. MDF is hardly any unorganized, as I said earlier. And if you see the replacement demand, it's the highest in the paint segment. Uh, Rest all is hardly 10 to 20%. Paints, you usually see people painting their houses every 5 7 years. Other than that, all the segments you hardly have 10 to 15% replacement demand. Pipes is to some extent 30 to 35% replacement. Again, so who takes the final decision of buying? So where a brand plays a role, that's important over here. So laminates and paints are two segments where customer goes and buys from the store. Other segments, usually you have customers, contractors, architects, and carpenters in plywood and laminate segment. In pipes, you will have plumbers accompanying the contractor and the architect. So customer usually takes decisions in tiles along with the architect, in sanitary ware along with the architect, and paints and laminates are the segments where they have the maximum involvement. Role of branding and distribution. So it plays a very important role in the paint segment, and Asian Paints has taken advantage of that. After that, we see that sanitary ware plays an important role. In tiles, we don't see that important a role of the brand. It's important, but not that important. If you get a similar quality tile at a lower price, then people don't mind using that because you don't have a label on the tile saying this is from this brand or that brand. So we'll look at the financials of each of the segments. Adhesives as a segment has the highest EBITDA margins, but at the same time it has a moderate asset turnover ratio. Paints has a very good asset turnover, but the EBITDA margins are ranging between 16 to 18%. This is for the industry overall, so no specific company as such. Tiles and sanitary ware have about 14 to 16% EBITDA margins and a decent enough asset turnover of about 1.75 times. And pipes are and plywood are the lowest EBITDA margin segments. Now coming to the ROC, paints has the highest ROC because of a higher asset turnover with a decent enough EBITDA margin. Adhesives is next with a 30% plus ROCE. But the revenue CAGR, if you see, tiles and sanitary ware has seen the highest revenue CAGR over the last 5 to 7 years. Plywood and pipes are low ROC, low growth products over here again. So, what are the initiatives that the government is taking for this segment? So, we all know government has announced housing for all by 2022. Swachh Bharat mission is there. 100 smart cities is there. Pradhan Mantri Awas Yojana, where you have urban housing and rural housing being built. Atal mission for rejuvenation and urbanization. Then you had recently the RERA. So all these initiatives are going to benefit this industry to some extent. At the same time, whatever government projects are there, you will not see premium products being used. So premiumization as a trend which was playing over the last few years might not play as well in the next few years. So every company in this segment wants to become a one-stop home solution provider. If you see, each of the companies have a primary business, and based on that, they have entered into adjacent business categories. So Kajaria, which was Kajaria and Somani both, which were into tiles, they have entered into sanitary ware and faucets. And recently, Kajaria has also entered into the plywood category. Century Plyboards, which was into plywood, it has entered into MDF particle boards and doors. Greenply, which was plywood and MDF earlier, now they have entered into doors and flooring as well. Greenlam, which was a demerged company of the Greenply Industries, they are primarily into laminates and decorative veneer. Now they have entered into flooring as well. Astral, which was into pipes, now they have entered into adhesives as well. Cera and HSIL, which were into sanitary ware. Cera has entered into tiles, faucets, and water heaters. Uh, HSIL, which was into sanitary ware, has entered into faucets, plastic pipes, and shower panels. Asian Paints, again, which was into paints, has entered into the housing segment, kitchens and bathware. So we look at the tile sector in detail today. The major organized players here being Kajaria, Somani, Johnson, Asian Granito Limited, which is now AGL, branded as AGL Tiles. And there are some mid-sized players based in Morbi, which are doing well. Someone like Vermora, Simpolo, Sunhart, and many others. So this is the world production data. 47% of the tiles produced globally are produced in China. 8% is produced in India, followed by Brazil, Vietnam, Spain, Italy. Spain and Italy are mainly into the premium end tiles. Now coming to the consumption, so China produces about 47% of the world production, whereas it consumes only 41%. So rest of it is dumped into other countries, and that's why you see many countries levying anti-dumping duties on Chinese tiles. India again consumes 6%, whereas it produces 8%. Rest of it is again exported. So we'll compare tiles to the other alternatives that are available. So this is our rough estimates. If the cost of tile is about 55 rupees per square feet, the labor that goes into it is about 35 rupees, and counting other materials as well, the cost of laying tiles comes to about 145 rupees per square feet. Whereas if you look at the other alternatives, cement is about 100 rupees, which is the basic cement flooring. Then you have laminated wood flooring, which is 180 rupees. Carpet is about 200 rupees. Marble is 250 rupees. Engineered real wood flooring is 300 rupees. Granite is 330. And Italian marble being the premium end, it's about 450 rupees per square feet. This is the census data. So the last data I had was 2011. Now we'll see in 2021 what data comes out. But if you see, it's a very under-penetrated market in terms of tiles, because in overall India, 47% of the households still use mud as the flooring. 31% use cement. Only 11% of the households use tiles. This is India overall. And if you look at rural, it's even more underpenetrated. So rural, only 4% of the households use tiles, whereas 63% is mud and 24% is cement. Why are tiles preferred against other alternatives? So they obviously they offer different designs and colors. It's easy to clean and maintain. Then they have high abrasion resistance, and that's why you see less scratches on the tiles. And they are also available in slip-proof variants. There are three types of tiles. these are very basic bifurcations. So one is ceramic tiles, other is PVT. So PVT stands for polished vitrified tiles, and GVT stands for glazed vitrified tiles. Ceramic being the lowest end of the spectrum and GVT being the highest end of the spectrum. So we started with ceramic tiles about 30 years, 40 years back, and now people have moved from ceramic to PVT and now to GVT. So market size in terms of volumes of ceramic tiles is about 430 million square meters. Uh, PVT is about 250 million square meters, and GVT recently started is about 80 million square meters. But at the same time, if you see the market size in terms of value, the PVT and the ceramic are almost at par now, despite PVT being lower in volume because of the higher prices that you pay over there. The EBITDA margins also will be higher in the premium end of the segment. So GVT has a EBITDA margin of 15 to 20%, whereas PVT is between 7 and 14% depending on player to player, and ceramic is the lowest, 3 to 9%. So most of the government projects that are coming up, they usually prefer either ceramic or PVT. So most of their demand going ahead will be in these two segments. Now, how is industry divided in terms of these three segments? So in terms of volume, 56% of the tiles currently are ceramic tiles, 34% is PVT, and 10% is GVT. But as soon as you look at the value, the ceramic tiles falls to 42%. PVT stands for PVT is about 42%, and GVT is 16%. This is the difference in average realization per square meter. So ceramic tiles average realization would be 260 rupees. Again, these are industry figures, so it depends on player to player. PVT would be around 418 and GVT would be around 533. So this is how the players in the industry have played the premiumization trend over the last 5 to 7 years. Now coming to the players in the industry, uh, Kajaria Ceramics these are with lapses of 2 years. So Kajaria Ceramics in FY14 was about 21% of the organized segment, and it's still at about 20%. Whereas Prism Johnson, which was HR Johnson, which is now merged into the Prism Cement. So it's a division of Prism Cement now. It's renamed to Prism Johnson, which was at about 20%. It has fallen to 12%. And the majority of the market share of Prism Johnson has been taken by the mid-sized players based in Morbi, which are organized, but they are not listed. So something like a Simpolo, Sunheart, Vermora, which I said earlier, those players have taken market share from Prism Johnson. And organized versus organized has remained stable at about 50-50 over the years. Uh, this was a lot in the news about 5 years back when people said that people will shift from unorganized to organized, informal to formal economy. But that has not played out basically due to delay in GST implementation, delay in e-way bill implementation, and everything. So again, these players used to play the whole supply chain in cash. These players, as in the players based in Morbi, so they did not pay GST at all. But now there have been changes in the industry due to regulations, and we'll have a look at it how the regulations have changed. Uh, Kajaria and Somani being the bigger players in the organized segment, so they have moved away from the ceramic tiles and went into GVT and PVT, which has increased their margins and the realizations over the years. So Somani, which was about 80% ceramic tiles in FY10, it has come down to 40% in FY19. And Kajaria has also reduced the exposure to ceramic tiles from 60% to about 38%. Now coming to Morbi, it is the largest tile manufacturing hub in Asia, and one bigger than this is in China. So it accounts for 80% of the tile production of India across 800 factories, and it generates revenues of about 22,000 crores in revenues. And the main reasons for this is that there is easy availability of raw material nearby. The raw material here required is clay, red and black soil, minerals, quartz to some extent, and glazes. And these raw materials are easily available nearby, and that's why you have a setup over there. Also, there is a most of the companies there are promoted by distant relatives of the same family, and they have grown together over the years. So lot of cooperation and trust is there between them, and they do cost management. They also invest in each other companies and do capex. Due to this, what has happened is that in Morbi, it takes about 6 to 8 months to bring up a plant. Whereas if you try and open a plant anywhere else in India, it takes about 1.5 years. So Morbi has really specialized in this segment. Also, one of the raw materials is china clay. It is very bulky, and transportation becomes difficult. So it becomes difficult, plus it is expensive. So that's why a red soil, which is essential for china clay, is available in plenty over here. Also, there is a reliable supply of gas from Gujarat Gas via the GSPC pipeline in Morbi, which has helped them grow, especially the organized players. Unorganized players used to use coal gasifiers earlier, which has now been banned by the government, and we'll have a look at it in detail. There is one Italy-based machinery manufacturer named Calabria. So he has set up his office in Morbi, specially supplying to these small tile companies, and almost all of the tile manufacturing units use this machinery. So uh, Morbi has become really big for a Italy-based manufacturer to come and set up an office over there. Uh, as I said, Morbi is closer to the ports also, so it becomes easier to transport materials, at the same time export some of the finished goods. So Mundra is about 3 hours by road, and Kanla port would be about 2 hours by road. So these are the mid-sized players which have actually demonstrated good manufacturing capabilities. At the same time, they have also spent on their brand creation, which has helped them gain market share from Prism Johnson. So Simpola, Varmora, Sunheart, Swastik Creation, Kuton, these are some of the players which you might not have heard, but these are the ones who have created brands. And if you go to any tile company, tile dealer, even in Mumbai, you will find these tiles. RAK, Nitco, and Orient Bell are old companies. You might have heard of them, but they haven't been able to do that well, despite getting the head start. So over the last 2 years, we have seen some volume growth tapering in this segment. The reasons for this being that there was a very big capacity addition that happened in Morbi in the last 2 years. So last year alone, about 100 plants were added in Morbi. And again, in this also, GVT production increased considerably. Due to this, GVT prices fell by about 25%, and most of the Morbi-based players try to dump their goods there. Also, there is a slowdown in the real estate and construction market, as we all know. And after demonetization and GST, due to liquidity constraints, there has been an elongation of the working capital cycle. Plus, banning of the coal gasifiers have also increased their working capital cycle, which we'll have a look. So how have Kajaria and Somani in this scenario gained above other listed players plus the semi-organized players? So these 6 factors are the main factors. We'll have a look at each of them in detail. So first one is distribution. If you look at the distribution reach of each of the players, Kajaria and Somani by far have the largest reach, about 1800 to 1900 dealers. Asian Granito is a distant third player with about 1250 dealers. Prism Johnson is about 1200 dealers despite being a market leader for about 5 to 7 years from FY7 to FY12-13 period. Any mid-sized player would have about 600 dealers and a small size player would have about 300 dealers. So there's a vast difference in the distribution reach that these players have. Second is the investment in branding that they have done. Although brands do not play that important role in tiles, but they certainly do play a role. So if you have a look at the advertising spends of the top three players, Kajaria, Somani, and Asian Granito. Uh, so Kajaria started with about 21 crores spent in FY12, which has gone up to about 100 crores recently, and they have said that they will spend this much over the next 2 years as well. Whereas Somani also has tried to mirror them, and they have also increased their spends from 11 crores to 58 crores. Asian Granito had its own limitations and they haven't been able to spend that. So it's about 25 crores currently. But other players, apart from these three, if you see, there have not been huge investments in creating brands. Among these organized players also there is a huge selling price differential. So due to the investment in brands that they have done, Kajaria is able to command a premium of about 4 to 5% compared to Somani, which is a next player who has created a brand. Prism Johnson and Somani are at a similar level, followed by Asian Granito and then the other Morbi players. So if you look at the pricing differential between Morbi and Kajaria, it's about 25%. This pricing is based to Kajaria at 100 and Morbi would be at 75. The next big factor is that they have outsourced some of the production to Morbi players and they have entered into JVs with them, which has helped them in gaining market share by not focusing on manufacturing but by focusing on branding and distribution. So what this does is that the unorganized players can focus on the manufacturing part, organized players can focus on the brand and distribution network, and organized players also get a ready access to the manufacturing capacities without a long lead time. So that helps them. The fourth big factor here is exports. So Kajaria and Somani did well in the exports in the initial years, but in the last 2 years we have seen the Morbi players really become aggressive in the export segment. So due to due to the huge capacity expansion, they had capacity surplus and they dumped it outside India. So exports accounted for about 10% of the industry in FY16, which has now gone up to about 20%. Uh, Exports have seen a 47% CAGR in the last 5 years. And if you take just the last 2 or 3 years, it's about 75-80% CAGR. So that has grown really well. Also, a role China played over here is that China banned use of coal in 2017 and most of the players there found it difficult to compete globally with the natural gas as a raw material. So what these Chinese players did was they approached these Morbi based players to tie up with them and then export from India. So there was a anti-dumping duty laid on Chinese tiles from the European countries, South Korea, Vietnam, Brazil, Chile. These has happened. This has happened over the last 3 or 4 years, and the period for which the anti-dumping duty is there is about 5 years. So the Morbi-based players took advantage of this, and some of the industry sources say that the Middle Eastern countries, which are a huge export market for the Indian players, is also going to levy an anti-dumping duty on Indian players. So that going ahead could be a problem for the Morbi-based players, which have grown really well in the last 3 or 4 years. So of the exports, Saudi Arabia constitutes about 34%, followed by Mexico at 11%. Iraq is also 11%. Oman, UAE 9%, followed by other smaller countries. So Middle East as a segment contributes more than about 60-70% of the exports. So if an anti-dumping duty is levied on the Indian exports, then that could be a major hindrance to the Morbi Waves players. Now coming to the last factor which has played a big role here, use of the natural gas. So what happened recently is that the National Green Tribunal or the Gujarat Pollution Control Board together came out with a notice on 9th March 2019, and they banned coal gasifiers completely. So all these players had to move to natural gas or shut down their factories. What this did was that they increased the unorganized players cost by about 10 to 15%. Organized players were using natural gas before, but these Morbi based players were taking advantage of that. And it also raised the working capital requirements of these companies. So gas is usually billed fortnightly for the enterprise consumers, whereas in coal they used to get a credit of 60 days. So that was a huge difference that they had to suffer. Also now with the usage of gas meters being there, they will have to show how much production is there, and based on that they will have to pay taxes also, which they haven't done over the past years. So again, this will be a hindrance to the unorganized players. This order had to be implemented within 3 days of 9th March, and following which a stringent imprisonment of 18 months with an extension of 6 years. So it has been implemented fully in Morbi currently, and out of 800 to 850 plants in Morbi, 450 of them used coal, and out of these 450, 150 have already shut shops, and some of 300 of them have shifted to natural gas. Now let's look at each of the bigger companies. I'll not go into too much detail. Let's look at Kajaria Ceramics first. So these are the three musketeers running Kajaria. So the man in the middle is Mr. Ashok Kajaria, who is the promoter and the founder chairman of this company. On the left side is Mr. Chetan Kajaria, who is his elder son, and on the right side is Mr. Rishi Kajaria, who is the younger son. So Mr. Rishi Kajaria looks after the ceramic tile segment, and the vitrified tile segment is looked after by Rishi Kajaria. And both of them are MBAs from Boston University, and they have been in business for 15 to 20 years. For Kajaria, if you look at the segment-wise revenues, ceramic is about 37%, PVT is 33%, 25% is GVT, and sanitary ware and faucets currently is a very small segment for them. It's about 5% of the revenues. Kajaria is a very big player in GVT. GVT is a segment for which you cannot use coal. So it had to be compulsorily manufactured through natural gas only. So most of the unorganized players were not there in the GVT segment, and that's where the organized players had an advantage. Coming to the brands that Kajaria has, so in ceramic tiles they have a large number of brands, and in fact in PVT and GVT also they have 6 to 8 brands. In sanitary ware and faucets they have a brand called Kerovit, and in plywood they have recently started with the brand name Kajaria Ply. So as I said, branding has played an important role for Kajaria. They have spent huge amounts in the past 8 to 9 years, currently at about 100 crores per annum, and it's about 3% of the revenues currently. So they have three different brand ambassadors for each of these segments. For the tile segment, you must have seen this ad, Desh Ki Mitti Se Bani Tile. So the Akshay Kumar is the brand ambassador for the tile segment. For Kerovit, which is the bathware segment, Anushka Sharma is the brand ambassador. And for the ply segment, they have recently hired Ranveer Kapoor. So they have done huge investments in branding over here, and which has actually helped them command premium prices in each of the segments. Also, they are present across almost 30 airports. So airports is a big advertising platform for them, and you must have seen these banners at all the airports. So coming to the manufacturing base, Kajaria has a manufacturing base mainly in Rajasthan and Morbi. So Rajasthan is they have two plants. In Morbi, they have plants with their JV partners, and in South they have recently entered in Andhra Pradesh. In UP also they have one plant. So out of the 68 million square meter capacity that they have, ceramic tiles is about 28 million square meter, PVT would be 22, and GVT would be 17 and a half. Coming to the subsidiaries that it has, so one subsidiary which they have recently formed, it's Kajaria Floria Ceramics. It's based in Andhra Pradesh and will manufacture GVT tiles, and it will have a capacity of 5 million square meters. The other subsidiary that it has is Kajaria Bathware. So earlier it used to own 100% of Kajaria Bathware, but recently it has offloaded about 15% stake in this company to Westbridge for a 645 million investment. In Kajaria Sanitary Ware. So Kajaria Sanitary Ware is a subsidiary of Kajaria Bathware, and Kajaria Bathware owns about 82% of Kajaria Sanitary Ware. 8% is a Morbi-based manufacturer which takes care of the manufacturing process, and the balance 10% is an investor. In sanitary ware, they have a capacity of about 6 lakh pieces per annum, and they are operating at almost 100% utilization. And expansion is in progress, and they want to go up to 1.5 lakh pieces here. In faucets, they have a capacity of 1 million pieces in Rajasthan, and they are operating at about 65% utilization. But this was a segment which they started in the last 2 years, and they expect to reach 100% here in the next year. So coming to the manufacturing that they have, so as I said, it's a mix of their own manufacturing plus outsourcing plus through their JVs. So own manufacturing would be about 55%. Through JVs would be 25 to 30%, and outsourcing would be 18%. Uh, 70% of their sales is through the retail segment, through the dealers and distributors. 30% is to the institutional segment, which is the builders segment. But again, they sell it to the builders through the dealers and distributors only. They don't sell it directly. So coming to the geography sales, so they are based in north. So north is where they are strong, followed by west, which is 30%. South would be 20%, and they are weak in east, which is about 10%. Now coming to the major expenses that these guys have, apart from advertising, which was about 3% of the revenues, the major expense is power and fuel. So natural gas is the biggest expense for them, and other than that, there are no major expenses. So natural gas prices moving up is a big risk for these companies. The gross margins also, if you see, they have remained stable at about 75%. In the last 2 years, we have seen a slowdown and decrease in GVT prices, which has impacted the gross margins. EBITDA margins have been around 15%, which had moved up to 18% in FY17, and then we have seen a slowdown in the last 2 years. ROE and ROCE are consistently about 25%, except the last 2 years, as I said, they had a tough time. And also they have cash pile up now in the balance sheet, which they want to use for the capex in the future, but that has also reduced the ROE. In the bathware segment, they have been growing at about 25% CAGR, and the losses over there are reducing, but still they are not break even over there. In tiles, they have about 2800 SKUs, and in bathware, they have about 250 SKUs. In plywood, they are complete outsourcing model where they outsource the production to the unorganized players and just brand it as Kajaria Ply. They have been very proactive in launching new and premium products, which has helped them in increasing their realizations. Also, this is a company in the industry which has very strong cash flows, and they have given importance to the working capital management. By far, the working capital management is very superior to all the other players. Net cash positive of about 250 crores, and they have a capex plan of about 200 crores in the next 2 years. And after this capex is done, the management has recently indicated of a possible buyback in the next 2 years. Now coming to the second player, which is Somani. So Somani was initially started in 1968 in collaboration with a UK-based company called Pilkington Tiles, and then in '94 the Indian promoters bought the entire stake of the UK company and changed the name to Somani Ceramics in 2007. So they are also into all segments of the tiles, sanitary ware, bath fittings, and they also offer some services like tile laying solutions, something like Asian Paints does. So they also offer painting services along with the paints. So they export to Europe, Middle East, Asia, and Africa, and it's a very small segment, about 4% of the revenues. So, coming to the Somani family, if you look at the Somani family tree, almost they have a huge family and about three companies in the same industry. So, it's a family chart. Murlidhar Somani and Janki Devi Somani are the parents who have these five sons in marked in yellow. And if you see the first family chart, they have a company Somani Ceramics. The second one is HSIL, which is Hindware. The third one is Hindustan National Glass, which is into manufacturing glass containers for pharma and FMCG companies. The fourth company is Serra Sanitary Ware, and the fifth company is into textiles. So Serra, HSIL, and Somani all come from the same family, basically distant brothers uh, companies. Also, this company has invested a lot in the brands. The brand spends have gone up drastically in the last 2 years. Also, because of the revenues have fallen, this number looks huge, but it's about 2 to 3%. So coming to the segment bifurcation, ceramic tiles is about 38% of the revenues, PVT is 32%, GVT is 18%, and sanitary ware and faucets are 5 and 3% respectively. They have about 10 JVs in each of the segments. So they have 2 JVs in ceramic tiles, 5 in PVT, 1 each in GVT, sanitary ware and faucets. This is just the chart to display how the segment wise revenues have moved over the years. So ceramic tiles, as I said, has gone down from 59 to 41%, and PVT has grown really well for them. The dealer network also, they have been able to grow over the years, and it's at about 1900 dealers currently. Coming to the manufacturing base, so Kajaria had about 55% own manufacturing. These guys are at about 41%. They rely more on outsourcing and JVs. The gross margins for them are a little higher because of so if you ignore the last 2 years, they are higher because they are present more into the PVT tiles, which has a higher gross margin. But the EBITDA margins, if you see, Kajaria is superior than them because they have managed their costs and working capital really well. So Kajaria was at about 15 to 17%, whereas these guys are languishing at 8 to 10%. Only in the last 2 years they have been able to get a higher EBITDA margin. The ROE and ROCE also for them is lower than what Kajaria earns, mainly due to the working capital management that Kajaria does. Again, as expenses, natural gas forms the uh, uh, 20% of the expenses for them, 20% of the revenues, and other than that, advertising is about 3.5%, and rest all expenses. Uh, so what this company faced is deteriorating working capital. So the working capital moved from about 63 days in FY16 to 104 days in FY18. So demonetization and GST hit them hard. Also, Kerala accounted for about 25% of their sales volume, and the floods in Kerala didn't help them in the last year. Uh, Faucets, they are present through the outsourcing model, and sanitary ware is through the JV model. The contribution of PVT and GVT has moved up from 19% in FY10 to 52% in FY18. The ceramic tile revenues have grown at a 7% CAGR, whereas PVT revenues have grown at 33% and GVT at 65%. Now, coming to Asian Granito, I'll not go into too much detail for this company. The reasons being that there has been a huge transformation which has happened in the last 1 year or so. This organization used to work in a very traditional manner, which they have tried to change in the last 1 or 2 years. They have hired some top management and they are trying to change it. They were also into other businesses like trading of chemicals and agri products, which they have divested. They have hired KPMG to help them with the cost management and some operating procedures. They have recently started interacting with the investors as well, and they have rebranded their tiles, which was Asian Tiles earlier. They have rebranded it to AGL Tiles. The reason being that they lost a case for the Asian brand to Asian Paints in 2012. They have been rolling out new products in the recent years and forming the JVs. And as we saw, it is the third largest in terms of the dealer network after Kajaria and Somani. Also, they have a segment of quartz and marbles, which is not there in Kajaria and Somani. Quartz and marbles forms about 15% of their revenues. Uh, they are trying to move from institutional sales to retail sales. So institutional sales is basically low yielding products, and they are trying to move from about 70% institutional, 30% retail to 30-70, which is there in Kajaria and Somani. They are also trying to do value addition by moving from ceramic to PVT and GVT. And they currently, the last till last year, they had all the plants in South India. Now they are till last year they had all the plants in Gujarat, but now they have expanded into South India. Now coming to the risks of the industry, the major risk being demand slowdown, which we have seen in the last 2 years. Also, competition from unorganized and tier 2 players. Tier 2 players being the semi-organized players. Unfavorable movement in the natural gas prices could be a risk for them, and dumping of Chinese style. So now we have an anti-dumping duty, but going ahead, if it is removed, then that could be a risk. Also, realizations for the PVT and ceramic tiles seem to be at a bottom right now. Can't guarantee it, but they seem to be at a bottom because most of the units in Morbi are working at about break even, more or less break even. And also, we don't see a major, capacity addition in the next few years. So, in the last 6 months, hardly any players have ordered machinery for the new plants. Also, we see a lot of consolidation happening in Morbi due to the coal gasifier ban, and that could actually move towards the industry could move towards the semi-organized and the organized players. The recent ban has increased the costs for the unorganized players by 10 to 15%, and almost all the players have taken a price hike in April, and price hike is going to be taken in the next 3 or 4 months as well. Yeah, thank you. I'll take questions now.
Take questions from our Delhi and Bangalore attendees. So a lot of people now. Nice. So guys in Bangalore and Delhi, whoever wishes to ask the question first, please unmute your Skype. We'll start with Bangalore first.
You were explaining that the product mix is actually, tending towards PVT and GVT, which are yielding better returns for all these companies. Given that the luxury real estate segment is under severe pressure across all the major cities in India, and all the companies are moving towards retail sales, do you see that to be an issue?
Yeah, that's an issue also with the government forcing these initiatives. As I said, the most of the future demand will be in ceramic and PVT segment. That's why I said that the premiumization trend, which was working in the last 5 years, we cannot predict that it will happen in the next 5 years, because we could see a lot of mix changing towards PVT and to some extent ceramic. But PVT will be a major segment of growth in the next 5 years or so.
So I have one small question. The unorganized sector, which we saw in the times, was constant in FY16-17. We are assuming that if these government policies get implemented, there will be chances that we get more organized players. We get more organized players in this. Is this only one assumption on that we are making that, and seeing the government policies like the housing, which have not worked very well? So what's your take on that, and like how we will be considering that risk?
So just to take as an example, Pradhan Mantri Awas Yojana, which is a scheme by the government, Andhra Pradesh government has placed a huge order for this scheme to two of the organized players, and this going ahead could be a benefit for the organized players and a disadvantage for the unorganized players. But again, as I said, if the government orders are for ceramic and PVT tiles, then the average realizations can fall, and the margins there could not be as lucrative as the retail sales.
Any more questions from Delhi? So we can switch to Bombay now. Thanks. If you have no more questions from Delhi, we will switch to our Mumbai audience. Yes, please.
Hello. Yeah, Raj, so what would be the reasonable expectations from the industry and from the company in terms of volume growth? What has been the history and what should be the reasonable expectations?
So the volume growth have been in the double digits over the past 5 to 7 years, except for the last 2 years where you saw a slowdown. So they have been in the double digits, and with the premiumization trend playing out, obviously the revenue growth has been much higher. So the revenue growth for this industry has been at about 18 to 19%, and the volume growth has been in the 10 to 15% range for the past few years. But the last 2 years saw some slowdown, and going ahead, as we see some pickup in the real estate, we could see some growth over here.
Any thoughts on the valuations? I mean, how do we value? What should be the parameters to evaluate that?
So the parameters, most of them I discussed over here, based on the proportion of revenues that come from PVT and GVT. You can give an estimate of the valuation. But again, these companies are trading at a FMCG multiple, saying that these are branded players and they can command a premium multiple. But I don't see them as a quasi FMCG player also. So, as I said, brand plays a role in tiles, but it doesn't play that big a role that you give a FMCG multiple to it.
Any more questions? Yeah.
The industry you said is always in excess supply. It likely to be continued as a scenario?
No, so it is not always in excess supply. In the last 2 years, we have seen a huge capacity expansion in Morbi, and as I said, going ahead, we could see a slowdown in the capacity expansion. So in the last 6 months to 1 year, we haven't seen a huge capacity expansion. Going ahead, as the capacity utilizations improve, people could again start expanding.
Exactly. So, I mean, setting up a capacity is 8 months.
Yeah.
And anyway, we are in excess supply currently.
Right.
So, which means it's hardly a problem to set up capacity.
Right. Capacity is not a constraint over here, especially in Morbi, where you take 8 months to set up a plant. Whereas if most of the players now are setting up plants in Andhra Pradesh also, because the local government, the state government over there is placing huge orders with them, and there it takes about 1.5 years to get the capacity on stream.
Thank you.
Ronak?
Hello. Do you feel that all these companies having pricing power in selling their products?
So Kajaria to some extent has been able to command that premium, but apart from that, I don't see any player commanding that. So Somany has tried to mirror what Kajaria has done, but still they are not able to command that premium. Kajaria is the only player which is able to do that.
Okay, thank you.
Yeah.
Hi. Since gas is the major component raw material wise, so the cost of gas for any player would be the same whether the plant is in Gujarat or in Andhra Pradesh, or even in Gujarat, various players can have different price of gas.
Even in Gujarat, various players can have different prices based on the agreements they have with the gas players. So some of the older players which have been there, they might have a longer term contract with them, and that's why they could get lower prices. So even within Gujarat, there could be different prices. Outside Gujarat also there can be different prices.
So Raj, like 73% is the gross margins around that, right? And then EBITDA margins are at around 15%. So what's the other major components below the gross margins that goes? I mean, and can there be a possibility that this EBITDA margins from 15% can go up to the scenario of 20%?
75% gross margin may seem higher, but you need to remember here that about 50% of the capacity is through the JVs and through the outsourcing model. So that's why the gross margin looks higher, but at the EBITDA margin, the margin looks lower. So that you need to take care of. And at the same time, apart from gas and the power and fuel costs, there are miscellaneous costs in terms of the employee costs and the other costs. But those are again 3 to 4%, less than 3 to 4% each. So gross margins are bumped up because of the outsourced production.
Yeah, in your cost analysis, you have not mentioned the cost of the clay and the various types of soil which is required for this. And some time ago I had heard that the Prism Johnson guys have cornered some mines which supply specialized clay to this industry. So can you highlight this aspect?
So on the raw material side, clay is the major component apart from silica, quartz and some other minerals that you require. I haven't gone into too much detail on the raw material side, and what you said about Johnson getting some mines. So what I hear is that apart from Morbi, Rajasthan is very rich in this clay and red soil that you want for the manufacturing. But the policies in the state of Rajasthan haven't been that suited for these companies to set up units over there. And that's why Gujarat has been the prominent player.
So what I wanted to know is these clays freely available to all players, or is it controlled by a few? Is there some sort of
No, it is
special access to some people, or is it freely available?
It is very freely available, especially in the Gujarat area. It is freely available.
So owning raw materials resources doesn't give anybody any competitive advantage.
There was also a recent news which said that some cords which was being brought from the state of Rajasthan to Morbi, cords is not allowed to be taken out of the state of Rajasthan. The state came up with a policy. It can be transported in form of either marbles or something, but cords alone cannot be exported. So I don't know too much about that, but yeah, that's a recent news.
The other question I had is that you mentioned that Morbi has raw materials nearby, but then you mentioned that some of the players have started putting units in Andhra. So how do they get access to that raw material, or is it available in Andhra too?
It is available in Andhra too, apart from Rajasthan and Gujarat, but it's available in plenty in Gujarat. So that's the advantage that the Morbi players have.
And lastly, what is the role of logistics, or how in the final price, delivered price of tiles to the customer? What is the component of logistics cost?
Logistics cost is hardly 3 to 4% of the final selling price. So players have been trying to minimize the logistic cost by having manufacturing units all over the country. But so something like having a plant in south or north. But they are trying to do that, but it's not a major role. 3 to 4% here and there.
So some of these players are trying to have, as you said, they are spreading their plants. It doesn't give them any advantage. So why not have bigger plants with economies of scale?
So if you, as I said, most of the companies are trying to open plants in Andhra Pradesh. So the condition of the government there is that we'll give you order only if you have a plant in our state. So that's the main reason there.
Chinese manufacturer versus Indian Morbi manufacturers. How do you compare the gross margin?
Haven't looked at it in detail of the Chinese manufacturing costs, but what China has been able to produce at a very low cost. Also, they used to use coal for gasifying, just like the Morbi based players. So China would at best be 10 to 15% cheaper than Morbi. And with the anti-dumping duty of 10 to 15%, they are almost at par. But there is a lot of illegal tiles that come through China, but that's again a different part.
So want to give you good news. A friend of mine who used to import tiles, or he still imports tiles, and he's one of the from China basically. So he told me that before the GST was implemented, about 5,000 to 6,000 containers per month used to get imported in India, and they used to get past customs without paying custom duty. And of course, after that, all green market. But now, after the GST, not even a single container is coming through. So I think this is a big change in the industry.
Yeah. So after the EVA bill, it has even reduced further. So yeah, that's.
Just an observation from my side. Over the last few years, some of the tier 2 players who are private, not publicly listed, like your Sunheart and some Simpolo of the world, these guys have gotten in people from the Somanis and the Kajarias of the world. They understand this playbook as to how these guys transform themselves from being marginal sort of competitors to industry leaders. There's essentially no real competitive advantage in this business except a little bit on branding and some on distribution. And all these guys now have scale of between 500 to 1,000 crores in revenue, which means that they can invest. So just, if you have any, if you met some of these guys and you are seeing that the competitive intensity amongst the leaders in this segment increasing, and thus the kind of returns that Kajaria or Somany have historically generated, or the pricing power that they might have had historically, is in my opinion going to start sort of coming down over a period of time as these guys sort of become aggressive in the market. And given where the valuations are, I think this probably is one of the biggest challenges for them.
Right. So as you said, the semi-organized players have done really well in the past few years. They have been able to build their own brands, which these guys have done, and they have been able to price it at a price where they can earn a decent ROE, ROCE. So also not being listed and not being public also helped them. Of the listed players or the large organized players, Kajaria, Somany, Netco, Orient Bell, HR Johnson, I see only Kajaria and Somany doing well, and Netco has fallen off, Orient Bell has fallen off, Prism Johnson has fallen off. Whereas if you see the semi-organized players, a lot of them are coming up. Simpolo, Sunheart, I have met a few of them, and they have done really well. And again, all of them have IPO plans in the coming future. So we could have some more players in the listed space going ahead.
Hi, could you elaborate on your point about the China clay and what its role is as a raw material?
So China clay is a raw material which is made from the red soil that you require, and that is abundantly available in the states of Gujarat and Rajasthan. So that's why you see that most of the plants are based in Morbi, Himmatnagar and that area.
So it's not only native to the region of China?
No.
Okay, thanks.
Yeah.
What is your vision for these tile companies going ahead, and movement in the share prices? And
so all these companies talk about a huge volume growth with all these government initiatives coming up, but I don't see a rosy picture there for them going ahead. All these government projects come with a lower margin. At the same time, large formal, not a formal organized, semi-organized segment coming up. So many players coming up the chain could increase the competitive intensity for these listed players going ahead.
This industry seems to be fragmented, and entry barrier is not there. Many players are there, but still they are able to make very decent ROE and ROCE. And what do you think? What is the reason for that? Why that is not coming down?
So the organized players are able to make a decent ROE, ROCE, whereas if you see the Morbi-based unorganized players, and if you tax what they earn, then they are not earning a decent ROCE. They earned a decent ROCE because they were able to do what they did in the last few years because of using coal, not paying taxes, not paying GST, etc. But if you start including all of that, then they may not earn a decent ROE, ROCE.
So capex requirement is also not that high for any new player.
No. For about 5 million square meters, the capex would be in the range of 40 to 45 lakhs.
So it really, capex is not there. You brand, it's like a commodity, and still even for organized player, the ROC is very high. Do you think it will sustain in long term?
So in the local market, as I said, brand has played a little role here. But if you are exporting it to other countries, many players are doing that. So with the Chinese anti-dumping duty, these Chinese players came to India. They said we'll do a tie-up, we'll export it to the same customers that we used to export, and then these overseas customers white label them as their own brand and sell it. So there is competition.
So I just wanted to ask something on the similar lines what the last person asked about the price movement. Like in the last week of October last year, the Kajaria price was around 320. The market cap was close to 5,000 crores. Now it is close to 610, 640 levels, around 10,000 crores market cap. So I just want to understand that this gas price thing, whatever happened, because see, if you see the sales of realty and everything is not there, so how come they are, I mean, doing well? So is this thing, the gas factor is the key reason because of which the stock price has gone up to the 52-week
Yes, this
high?
ban is the major factor. So after this ban came in, it played a huge sentimental positive for these stocks, and they ran away.
And what was the reason that in last week of October 2018 it went down to as low as 315, 320 levels?
I don't recollect as to what happened at that
All right.
point in time.
Thank you.
Yeah.
So you said that they're increasing their brand spend, Somani and Kajaria. So what is, besides having, you know, celebrity endorsed ambassadors, what else is their brand spend? Are they, you know, looking to get into physical stores that they have?
So Kajaria has about 5 to 6 format of stores. So they have different sizes. They have Kajaria World, Kajaria Galaxy, and they have different types of showrooms that they have across the country. Then they do BTL activities, something like having events for contractors, architects. Then they do these airport advertising spends and all. So they do a lot of activities.
Any questions here? There's a question from Bangalore for you, Raj.
Yeah.
So the question is, how do you see this industry to be positioned in terms of exports? As you mentioned that Morbi players are almost equally priced with China players after anti-dumping. So can we see a good uptick in export volume growth over a period of time?
So when I covered exports, I said that about 60 to 70% of our exports goes to the Middle Eastern countries. If the news is true that in the near future we could have a anti-dumping duty in Middle Eastern countries on the India tiles production, then obviously a major market goes away and exports could also face trouble going ahead.
And another question from Bangalore is the premiumization story in this sector a secular growth story or not?
I have answered this earlier also. So premiumization, which has played in the last 5 years, may not play out exactly the same way because of these government initiatives, government projects. Yeah, that's it. Thank you. Thank you.
Whenever things got rough, I always remember what my father used to say.
Running a business does test a man, my son. There are ups and downs, glorious highs, and sometimes a low that leaves you feeling defeated.
The character of a man and the character of a business are not very different, are they?
Yes. But when the chips are down, we must stand up, dust ourselves off, and motor on.
Volatility. It's a funny thing. It makes you question yourself and wonder if you've made all the right decisions.
Sure, you can question some of your decisions, but stay steadfast on your goals.
Dad always said, there are no shortcuts and no quick profits.
There are no free lunches, are there? There is only one
right way.
At PPFAS, we think like Rahul and his father. That volatility is a fact of running a business. And buying equity shares is like owning a part of that business. We use value investing principles to manage your money. This means we invest in the right businesses at reasonable prices and for a longer term.
PPFAS Mutual Fund. There's only one right way.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.